Hello and welcome to Money Talks, your weekly ticket to the dynamic world of crypto markets. In this video, we'll dive deep into the captivating world of crypto markets, explore the ripple effects on currency rates from the past week, and uncover the latest news in Bitcoin, dollarization, and investments. Get ready to stay informed and make smarter financial decisions. Let's kickstart this enriching journey. Bitcoin's trouble at the 50-day moving average raises concerns, with a potential drop below current support opening the way to $27,000, reaching the 200-week moving average or even lower at $26,400 to the 200-day average. The crypto market capitalization has fallen to $1.176 trillion, maintaining the downtrend since mid-July. Despite attempting to gain height, Bitcoin pulled back to just above $29,100, located near the 61.8% Fibonacci from the momentum of the June lows. Traders are closely watching key support levels to assess the next move for the cryptocurrency. Bitcoin, the world's largest cryptocurrency, has the potential to reach a $1 trillion market cap by 2030. In 2021, it previously reached a market cap of $1.2 trillion, showcasing its ability to achieve such heights. The Lindy effect suggests that the longer Bitcoin remains relevant, the greater its chance of continued growth. Catalysts like next year's halving event and a looser monetary policy can further boost its price. Increasing institutional interest, with companies like BlackRock and Fidelity entering the market, could drive significant growth. Clearer regulations may also bring Bitcoin into the mainstream. Despite a lower forward expected return, many believe Bitcoin can outperform traditional markets. As its valuation soars, now may be an opportune time to invest in this leading cryptocurrency. Fed interest rate hike confirmed. Will BTC bounce back? During the latest Federal Open Market Committee (FOMC) meeting, the Federal Reserve raised interest rates in the U.S. by 25%, reaching the highest level since 2001. This move sparked social engagement among Bitcoiners, with discussions about the interest rate hike increasing before the announcement. After the FOMC made the rates official, discussions related to Bitcoin surged, and the cryptocurrency's price attempted to retest the $30,000 level. Sentiment, the market intelligence platform, sees this heightened social dominance as a sign of fear among Bitcoin's community members and believes it could increase the likelihood of the price climbing higher. The FOMC's minutes reveal a 25 BAPS rate increase to 5.5%, and Bitcoin's price spiked to $29,678 shortly after their release, indicating a potential trend reversal. Increased social activity among Bitcoin's community members suggests ongoing discussions and considerations, hinting that the full impact of the FOMC minutes is yet to be felt by the market. What experts react to Fed rate hike?
I think it was exactly on expectations. They wanted to get the 25 basis points done. They didn't want to convey accidentally anything dovish.
The good news we've gotten on inflation recently further emboldens the Fed to actually get to that 2% target.
This seems to have been very carefully put together so as not to send a dovish message.
The really critical question right now is the current policy restrictive? And Chair Powell said today that it is. But a lot of indicators from the labor market and elsewhere suggest the policy is probably better characterized as neutral.
Chair Powell made it very clear in the press conference that he doesn't see the need to go that much further. If you look at their forecasts, they don't see inflation getting back to 2% until 2025. So they think the process still has a long way to go, and I agree with them.
The U.S. Federal Reserve's interest rate hike provided breathing room for risk assets, leading to a slight uptick in Bitcoin's price, but it still couldn't break above $30,000. Ethereum also saw incremental gains. Meanwhile, Dogecoin remained the top-performing altcoin with a 13% increase, possibly fueled by Elon Musk's interest in the coin. Other mid-cap altcoins like XDC Network, Maker, and Chainlink also performed well in the past week. The global cryptocurrency market capitalization is now at $1.19 trillion, with Bitcoin dominance at 49.8%. As the European Central Bank's interest rate decision looms, further tailwinds or headwinds for assets like Bitcoin may emerge. Bitcoin whales are on an accumulation spree, holding onto their coins as prices remain range-bound. Data firm CryptoQuant highlights 3 indicators supporting this trend: the exchange whale ratio, exchange inflow coin days destroyed (CDD), and unspent transaction output (UTXO) value bands. The exchange whale ratio is at a 5-year low, indicating reduced movements on exchanges by whales. Exchange inflow CDD has reached an 8-year low, showing fewer inflows from long-term investors. UTXO value bands for wallets holding 1,000 to 10,000 bitcoins have been rising, signifying increased accumulation by actual whales. Bitcoin makes its way to the presidential campaign. Candidate confirms BTC ownership. In a surprising move, presidential candidate Robert F. Kennedy Jr. revealed that he has invested in Bitcoin by buying 2 BTC for each of his 7 children. This significant investment shows his confidence in the cryptocurrency. Kennedy further expressed his support for backing the US dollar with Bitcoin and exempting it from capital gains taxes if he becomes president. His positive remarks about Bitcoin at the Miami Bitcoin Conference in May highlight his growing interest in the digital asset. The integration of Bitcoin into the presidential campaign adds a new dimension to the crypto landscape. Renowned author Robert Kiyosaki, known for Rich Dad, Poor Dad, has issued warnings about an imminent giant crash and the end of fiat money, including the US dollar. He advises investors to turn to real assets like gold, silver, and Bitcoin. Kiyosaki's concerns coincide with reports of the BRICS nations discussing a common currency backed by gold. He has consistently referred to the US dollar as fake money and believes gold, silver, and Bitcoin are safer investments for unstable times. Other experts like Jim Rogers and Peter Schiff also anticipate severe economic downturns and financial crises. The warning signals are heightening as economic concerns persist. Thus, Congressional Committee passes game-changing bills to shape the future of digital assets. In a groundbreaking development, the United States House Financial Services Committee approved 2 pivotal bills on July 26, 2023, aiming to shape the future of digital assets. The first bill, the Financial Innovation and Technology for the 21st Century Act, provides clarity for crypto firms on which regulatory body they should register with, the CFTC or the SEC. It also includes a provision for firms to certify their projects as adequately decentralized, clarifying the classification of crypto assets. The second bill, the Blockchain Regulatory Certainty Act, addresses which blockchain-related entities qualify as money transmitters, bringing more certainty to the blockchain community and encouraging innovation. With the passage of these bills, the United States takes a significant step toward establishing a comprehensive regulatory framework for the cryptocurrency industry, striking a balance between fostering innovation and ensuring consumer protections. This move aligns with similar efforts made by other countries, signaling the growing importance of clear regulations in the rapidly evolving crypto landscape.
We're here to take an historic step for American innovation and consumer protection as we undertake the first ever legislative markup for digital assets legislation. The legislation we're considering today is more than a decade in the making. 15 years ago, the Bitcoin white paper was published under the pseudonym Satoshi Nakamoto. The paper envisioned a global financial network built on peer-to-peer permissionless transactions of digital assets using public, cryptographically protected distributed ledger technology. Since then, thousands of builders, innovators, and entrepreneurs have worked to make that vision of a more inclusive financial system a reality.
The US SEC is intensifying oversight of AI and predictive algorithms, aiming to safeguard investor interests and market integrity. SEC Commissioner Hester Peirce criticizes the proposal, believing it reflects hostility towards technology, including AI and predictive data analytics. She opposes the assumption that investors can't think for themselves and argues the proposal may deter smaller businesses from using these technologies. Peirce emphasizes the need for a more technology-neutral and operational feasible approach to regulation. OpenAI CEO Sam Altman shared his take on AI regulation.
However, we think that regulatory intervention by governments will be critical to mitigate the risks of increasingly powerful models. For example, the US government might consider a combination of licensing and testing requirements for development and release of AI models above a threshold of capabilities.
Ripple CTO David Schwartz stated that the SEC cannot initiate an immediate appeal over Ripple's win in the lawsuit due to pending issues. Legal expert James Murphy outlined 4 possible options for the SEC, including an interlocutory appeal or pursuing aiding and abetting charges against Ripple executives. However, Schwartz's explanation cancels the option of an immediate appeal, leaving the lawsuit unresolved in the Southern District Court of New York. The judge's ruling classified Ripple's sales of XRP to retail investors as securities and sales to institutional customers as non-securities. The SEC's next move remains uncertain. Google Bard, a powerful generative AI, predicts a positive future for XRP after Ripple's legal triumph against the SEC. The AI suggests a potential 80% increase, with some analysts estimating an average price of $1.30 by the end of 2023. Factors such as overall market performance, Ripple ecosystem development, and the final SEC lawsuit outcome could impact XRP's price. Despite a slight downswing projection for August, XRP has been one of the best-performing altcoins this year, gaining nearly 50% in the past month and over 111% year-to-date. It remains the most actively traded cryptocurrency with over $150 billion in trading volume. The Russian president signs the digital ruble bill into law, paving the way for the Central Bank of Russia to launch its own central bank digital currency. The digital ruble is set to pilot in August 2023, with implementation expected by 2024. The new currency will be overseen by the central bank and will serve as a payment and money transfer mechanism with offline capabilities. Russian citizens have the option to use the digital ruble alongside cash and non-cash rubles. The adoption is voluntary, and the mass adoption is projected for 2025 to 2027. Canada's Office of the Superintendent of Financial Institutions, OSFI, has proposed new guidelines for crypto asset rules, aiming to address potential risks associated with cryptocurrencies. The proposed rules outline 4 distinct categories of digital assets and their corresponding capital treatment. 2 draft guidelines have been released for consultation until September 20, 2023, offering a simplified approach and a comprehensive one based on an institution's exposure to crypto assets. These guidelines align with international standards and are set to supersede the interim advisory published in August 2022. Canada's move towards stricter regulations reflects a coordinated effort with U.S. regulators, signaling a global trend towards stronger oversight of cryptocurrency firms. And that concludes insightful episode of Money Talks. We hope you found our analysis on the crypto markets, currency rates, dollarization, and investment trends informative and valuable. If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more weekly updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.